All right, guys, here we go. Take a look at the daily chart of the GC gold futures contract. And as you can see, we're making a lot of great progress for gold. First off the bat, we have the 20 over the 200 simple day moving averages, and of course, prices over the 20. So, very bullish, very positive, near term. And we're above this bottom up trend line. It seems to be holding price very nicely. However, we seem to be forming this ascending wedge formation, which high odds, high probability normally break to the downside. Either go sideways and down, or they just run in a big red candle to the downside there. Okay. So 18, 15 is kind of our line in the sand. And let me see if I can show you that little high pivot area over here. And yeah, we're looking at 18, 15. If we start trading under it below that, which would also take us out of this uptrend line, then we're looking for, obviously more downside to that whole round even number of 1800, break that. And then we're down at 1780 pretty quickly. Now, this green dash line, that's a very significant measured move on the charts going all the way back really to the weekly and monthly charts. So as you can see, we've wicked into it. One, two, well, almost three here, four. We kind of got into it, didn't really hit it, but several times we hit this already and could not get, up and over it. The only way I can see that happening near term in order for gold to have a chance to break out is for us to trade sideways for a while, build a base, build a, foundation, so to speak, and then break out to the upside. But if we get too far over here, we're going to be getting weaker and weaker, kind of leaning out over that edge. And then, especially if we're, a little bit above the 20, we could break down pretty easily. So, bottom line, it's trading good, trading bullish, but we could have a near term pullback coming in here, and which is no big deal. Everything, nothing, well, let me rephrase that. Nothing goes up straight. Okay. Everything, has these pullbacks. We can see it all through here. Uh, so no big deal. And if we do pull back, maybe we'll pull back down here. As long as we keep this gold dash line, this low pivot, high pivot area here, consolidation, low pivot area over here, as long as we come down and do not take that out, for example, come into this range and go, then we should be all right. So we want to keep that low, higher low, and then go. That would, help the price of go very much on that. So let's go to silver. And as you can see, silver was in a, ascending wedge formation as well. It broke down, and according to uh, classical technical analysis, once you break, you generally come back up to that, um, break zone and then follow down to the downside. However, as you can see, we have that measured move again here on silver with that green dash line, and we've been holding it. Okay, that's why I say, silver is looking like it's, even though we're at the top of this long move here, um, and we broke this, you know, ascending wedge formation, which again, high odds, high probability that you do. Like I was talking about on the go chart, we need to trade sideways here, consolidate, build a base, build a foundation in order to lift up and out of here. And a few things that we have on silver's side as far as that potential is number one, the 20 holding us, and we're making those higher, so far higher lows here, and then additionally we're in an inside bar. Okay, this is very, very important. Now we did trade over it here. It's okay if you wick over it or wick under what the bar, so long as you're closing inside, price is closing inside, you're still in that channel, still building a potential base foundation in order to help price consolidate and move higher. Okay, but you want to be trading in the upper range of that candle in order to give you more, potential. Again, it's all about odds and probability. And when you're in the upper range of this candle, including the wicks, but in the upper range of it, that helps, kind of determine, give you a hint of what the market is looking to do. However, we're all over this thing. Now we're not in the lower range, of course, uh, pretty much in the middle here. But if we lose that uh, 20 in this very important green dash line, that measure move, yeah, we could roll down, to this next pivot zone here, high and low. This was resistance, as you can see. That was support. Um, because we're so close to this area, we could, roll right through it. So I'm not really depending on this a lot for support or safety net, so to speak. But down here, when we had two major uh, areas of price action, the uh, resistance where we had to pull back out, pull back down to the 20, and then come back up, and then we pull back and retested that breakout zone, if that makes sense. Okay, but most times price will come back and retest a breakout zone, or breaking out of resistance, or coming back, and if you break support, it'll come back to that, just like we did here. We had support coming up, broke it, came back up into that price zone. Okay, so that's what we'll be looking for, and we'll keep you updated, and as always, we will see you on the charts.